In Stacking Up today, trader Mark Sebastian of Option Pit Mentoring joins me now to take a closer look at JP Morgan. And this is a stock that traders are thinking could go higher off of earnings. What's your play?
Yeah, you know, when an industry or a sector gets so overly hated, it starts to pique my interest, and I think that's where the financials are. If you look up and down, it's really hard to find a good story about JP Morgan or Goldman or really the entire financial sector. Well, that to me says maybe the news is out, maybe what's going to happen has already happened, and it might be time to start dabbling. So I like JP Morgan and Goldman and some of those names to maybe surprise out of earnings because expectations are so low. Sandbagging does in fact work sometimes, and that might be the situation here.
It wouldn't take much to move that stock. So let's take a look at where you are with levels right here and what you're thinking. Where's JP Morgan going, Mark?
Well, now obviously there's still some beta to the overall markets, and markets are really choppy. But I think if throwing out the S&P 500, JP Morgan's trading a little over 58 right now. I'd like it to move to 61 or 62 sometime over the next couple of weeks. A nice 5 to 10% rally in the name. I think that's built in the cards if they have properly lowered expectations enough.
For a long-term investor, how would you view the stock?
I think it's great. Long-term investors, I always like the cream of the crop rather than just the whole sector. And looking at the XLF, the financial sectors, by far the two best names are Goldman Sachs and JP Morgan. Those are the names I want to own, and JP Morgan is one of those. So these levels, I like owning JP Morgan.
Well, we like having you here. Thank you.
Thank you.